I found the IPTF tools shared via LinkedIn really useful so far. The tools have really helped reaffirm some of the methods that I do use with clients when discussing protection, but also given me a few ideas and suggestions as to how I can instigate and initiate that income protection chat on top of the life insurance and standard critical illness conversations that I tend to have with my clients. So thank you very much.
Good afternoon and welcome to day 2 of IPAW. As you'll recall from yesterday, this week we're going on an advice journey. From starting out and finding clients through to IP applications, underwriting, claims and that important ongoing value and engagement with clients. Yesterday was that first step in the journey, finding clients and generating new business. Today we move on to preparation, focusing on the things you can do as an advisor ahead of that first client meeting to best prepare yourself for success and, most importantly, protecting another income. We've got a really exciting agenda coming up for you today. First up, you'll be hearing from Stacey Penn, Senior Policy Advisor at the Association of Mortgage Intermediaries, or AMI as you may know it. You'll be hearing more about their latest AMI Viewpoint research and delving into some of their key findings, the challenges around protection and the opportunities for mortgage advisors to normalise it ahead of a mortgage conversation. Then we'll be welcoming a panel of industry experts as we focus on the differing financial needs of specific client types and the preparation actions you can take to meet those different needs in the most effective way. Now let's hear from Stacey Penn from AMI on their latest Viewpoint research that was released towards the end of last year. There are some quite hard-hitting findings in there around consumer trust and how protection is resonating with clients. And I'm really looking forward to exploring how those can inform advisor strategies and behaviour for better protection outcomes. Stacey, welcome. It's fantastic to have you with us today.
Hi, thank you.
So before we dive into your key research findings, it might be great actually for you to explain a bit more about AMI and the purpose of the research as well.
Yeah, so AMI stands for the Association of Mortgage Intermediaries, and we're a regulatory and lobbying trade body that represents mortgage intermediary firms. And we decided around 3 years ago that we wanted to undertake some extensive consumer and advisor research on the protection market. And now we've done that for 3 consecutive years. And we're just trying to unpick really around the barriers and challenges, and also looking at some of the opportunities in the market.
That's great, thank you. So let's get into some of those key findings from your latest research that was released towards the end of last year then. So you found that 96% of mortgage advisors say that they've had a protection conversation, which is great, but only 21% of clients actually recall protection being mentioned. So I suppose obviously that has implications for the likelihood of a client taking out protection and them also understanding what they've just bought.
Yeah.
So how can we make protection conversations more effective, and how much do you think of that relates to the preparation ahead of that meeting?
Yes, it's a really interesting stat and one that really stood out and has naturally got a lot of people talking, which is great. And something that came out of it for us was this phrase that we've coined around the importance of memorable and meaningful protection conversations. And I think it comes down to 2 elements. So when protection is raised and how it is raised, particularly if it is being raised alongside another product like a mortgage. So if I look at those in turn, if we think about how protection is raised, particularly with a mortgage, if it is introduced later on in that customer journey, there could be actually a bit of a disconnect, particularly say if it's introduced at mortgage offer stage, the customer's that bit closer to achieving their main goal, which is buying their house. Whereas if it's introduced earlier on in that journey, I think you've got an opportunity for a bit more engagement from the customer. And I know from speaking to some firms that they have looked at the way they introduce protection as a result of the Viewpoint findings, and now are thinking about how can we make this a bit more seamless so it's not seen as an afterthought or an upsell. And then I think it also comes down to how it is raised as well. So customers, again, linking to kind of the timing, let's try and move away from talking about products to more about risks and solutions. And some of the ways that firms are trying to be a bit more innovative in this area are perhaps creating short videos that talk about the concept of protection and get customers' minds thinking about, okay, what are the risks, and kind of helping them to self-identify. So I think really thinking about that as part of your proposition and how you're preparing for that client meeting is key.
Yeah, some great tips there. So it's really about when and how you raise protection as part of that mortgage conversation. It's probably worth us touching on consumer duty because it's hard not to touch on consumer duty. But your research also found that 44% of advisors believe that consumer duty will increase mortgage brokers' focus on protection. So how can industry bodies such as AMI and the IPTF support advisors to feel more prepared? And what are AMI doing around this?
Yeah, so I imagine if we asked that question again now, it probably would be higher. I'd hope that figure would be a bit higher because there's been so much conversation around consumer duty and the impact on protection. And in terms of our messaging at AMI, we've been helping advisors to think through their approach to protection. So where you are advising on protection, I think the aim really is to make sure that customers are put in an informed decision. So they're equipped with enough information to be able to think, okay, I know all the facts and I understand what this is about. And if I decide to take protection, I know what I've bought and why. And if I don't, for whatever reason, because it isn't about forcing customers to take protection, that they recognise the risks. And there's a lot of information asymmetry within the sector where advisors know a lot more than the average customer. So we can't make assumptions. I've heard some people talk about, well, the customer only wants to purchase their house, they're not interested in protection. And I don't think that approach really fits with consumer duty because you are making that assumption on behalf of a customer. Your job as the advisor is, like I said, to equip them with the information. So I'm really hopeful that consumer duty will have a positive impact on the quality of protection conversations as well as the number of them that had taken place.
Absolutely. And I suppose, it's one thing having that conversation. It's also, helping the customer to realise the value of protection. And I think you're coming back to your research, you found some kind of key points here. So 50% of customers in the AMI study said they felt IP was important, which is brilliant again, but that's not really translating into sales figures, is it? So why do you think that is then?
Yeah, so I think there is a difference between importance and need, and I know that's quite an obvious statement, but I think there is more that advisors can do to really bring protection to life, because in order to move from seeing it as important to actually buying it, you have to recognise on a personal level, this is something that I perhaps should buy. So I think it is about bringing the conversations to life that could be through case studies. I think they're a brilliant tool, and not necessarily just case studies that look at people that have claimed, but more case studies around why people have bought protection, their motivators for buying.
Yeah.
And then people hopefully may see, actually, protection is something that someone like me buys. It's not seen as this kind of abstract concept.
That's right, isn't it? It's having, how does it relate to your personal circumstances? Yeah, I agree with that. Affordability, we know, is a challenge around income protection specifically. And so 35% of consumers in your research didn't take protection because of price. They cited affordability being the challenge. And I suppose this is even more important now, given where inflation and interest rates are at the moment and the cost of living. So how do you think advisors can deal with this key objection in a really smart way? And do you think there's any preparation they could do ahead of that first kind of client interaction, that first meeting, to help with combating that? Yeah,
so I think we can't shy away from price because it is a factor that that we take into account as consumers in our everyday life. So we do need to approach it and can't ignore it. But I think the message that advisors need to give across, and this is where they could start thinking about this before the client meeting, is how they're going to frame and position the conversation. So it's more around, can you afford not to take protection? Yeah. And this links back to the earlier point around talking more about the risks, helping customers identify them, rather than talking about products. And I know from speaking to people in the industry, this concept of skiing downhill as well with price, I think is a really, really good one. Because again, back to the comment around how customers perhaps don't know a lot about our market, I think if we're going in early on saying, what's your budget, we are constraining them without them actually recognising the value. So I think that in hand with also making sure customers understand the role of advisors, so that they are there to help tailor the product and the solution to that individual. And that actually, protection products, particularly IP, it's very flexible, deferred periods, short or longer term products. Yeah. So I think if you go in with a budget figure, the only way is down really with that.
Yeah. That's a really good point, and I like what you had to say about, can you afford not to take it, and actually when you compare the cost of protection to many things that we spend our money on, actually the value and the value in terms of what IP offers and its affordability relative to other things that we pay for, it kind of becomes quite an obvious thing to buy, right? But I think it's a great tip on not kind of locking in that budget at the outset, but actually getting across the value first.
Yeah,
fantastic, thank you. So another kind of key finding from your research was that advisors feel that more should be done to promote protection. So what does this look like at an industry level, and then also at an individual advisor level, and I guess especially given the theme of today in terms of preparation ahead of the meeting? How does that play into it?
Yeah, so say at an industry level, it's doing more of what's going on at the moment. I think post-pandemic, there has been a growth in the number of people getting involved in different forums, discussions. I'm sure you've probably seen it with IPTF. And I think it's having more of those conversations. I think it is talking more about, like I said already, I'm a great fan of case studies to really bring it to life. And then I think more at the advisor level, particularly if they are preparing ahead of a client meeting, is to think through, okay, who is this customer that's sitting in front of me? Without making generalisations or assumptions, but is there a way that I can tweak and tailor my approach? So take, for example, if you've got a younger customer in front of you, they may be more receptive to case studies or examples that relate to injuries and the impact that could have on their income, rather than maybe an illness, which if you're younger, you probably think, well, that's not going to happen, or it will be decades away. So I think just having that bit of planning can really help kind of prepare those conversations and have more of an impact.
Yeah, that's a really good tip. And I suppose advisors are busy, aren't they? And it will take a bit of time, I suppose, to take, those individual clients and think through how can I be promoting protection in the right way that's going to really resonate with this client, but actually it should pay off in terms of the end result and the outcome.
Yeah, because you might see, well, this approach worked or that one didn't, and you learn and you evolve from it.
Yeah, completely. So to round up then, so you identified some key takeaways from your research last year. So for those watching in today, could you remind us what they were, and I suppose specifically how advisors can use those when they are preparing for their client meetings and delivering those best kind of protection outcomes?
Yeah, so our key takeaways we included within our Viewpoint 5-point plan, which is towards the back of the report. And this was based on the findings, not only from last year, the most recent study, but over the last 3 years and what we'd seen in terms of trends. And we broke that down into providers, advisors, industry, so Amy and other bodies, as well as the firms themselves. One area that I think is relevant for advisors is this bit around, think about how you articulate the value that you provide to your customers. And I think in mortgages, it is more clear cut. The customer, once they've bought that home, they're sitting in it and they can see the product of that advice.
It's a tangible thing.
Yeah, but with insurance, it is different. And I think there's probably a lot of customers out there that do think advisors just sit and input information into a quote engine like you would online. And I think we need to get better actually at articulating the value that we add and what the benefits are of going through an advisor.
Right. Yeah, that's great. Thank you, Stacey, for joining us today.
No, thank you for having me.
So I'm delighted to be joined by Vicky Jeffries, Proposition Director from Primis. Welcome, Vicky.
Thank you.
And Nicola Mackenzie, co-founder at Dun & McCarthy. Welcome, Nicola.
Thanks for having me.
And finally, Charlotte Nixon, Mortgage and Protection Proposition Director at Quilter. Welcome.
Thank you very much.
So today's panel chat is all about preparing for a protection and specifically an income protection conversation with clients. And it's a bit of a challenging environment at the moment, I think we can all agree. So let's kind of dive straight into the detail and the topics today. Vicky, it's a really volatile mortgage market at the moment. There's lots going on. Mortgage brokers are very busy. So why should they be talking about income protection with clients at the moment, do you think?
Yeah, I mean, you're right. It's a very volatile market. We've also got customers that are incredibly sensitive and emotional at the moment. We've never really experienced this. Well, not in recent history, have we? And there's some very difficult conversations that brokers are having to have with customers about their mortgage repayments, which does bring about different conversations, different styles of advice and ways of dealing with customers that some brokers won't be experienced in. So it is new in that regard. I think I still see it as a huge opportunity. I think our instant thought is, oh my goodness, I'm having to tell a client that their mortgage payment is £300-400 a month more. How am I ever going to be able to bring protection into it? But let's just play that back and think about that. These customers have now got an increased monthly outgoing, far more than they've ever had before. Ordinarily, if you think about a traditional couple scenario, they may have thought before, well, if one of us is poorly and one of us can't afford it, the other one will cover the debt. But now if you think about that kind of outgoing per month, that does become unsustainable for most people, especially those on average incomes, etc. So it lends itself then to say, well, how would you pay that? How would you cover that? So you've instantly got an opportunity there, albeit, yes, it's going to be difficult. I think the other major opportunity as well is that, you know, product transfers are dominating the market at the moment. We know that's only an option for many customers. And the great news is that product transfers are now being secured 6 months ahead. So traditionally we were securing them, 3-4 months ahead, and now we're securing those 6 months ahead. A relationship with a client over 6 months is quite a long period of time, isn't it? You're also probably going to be revisiting that product transfer and looking at different pricing. You know, we've seen the lenders have started to reduce the rates. You might be relooking at that. So it brings about more conversations with the client and more opportunities to engage. So if you've missed it on the first conversation, no problem. You're probably going to speak to the customer again in 6 weeks' time, and you may be giving them some good news. So again, there's another opportunity.
That's such a good point, kind of increased touch points with clients, great opportunity to bring protection in. Yeah, thank you, Vicky. And I suppose, Nicola, from your side, you know, you're supporting clients on a daily basis. I'm sure you're seeing clients whose personal finances are being stretched by mortgage payments. So absolutely. I suppose in this scenario where it is a little bit more challenging, actually preparation ahead of those meetings becomes even more important. So what do you think mortgage advisors, mortgage brokers can be doing in terms of that preparation to best equip themselves for that protection chat?
Absolutely. I think it's really important to gather as much information, or certainly it is for us, before the meeting takes place, because the way that we see it is that in our firm, we want to spend that hour that we've got with that customer to make it as focused as possible on giving advice. You know, clients' attention spans only last for so long. After an hour, they get bored, they get frustrated. You know, they've got other things to do. They're busy, a lot of clients are. So the way that we see, if we can get all of the information gathering before that meeting, so a full fact find completed, existing policy documents as well. It can take in a meeting sometimes 15 minutes for somebody to dig out their existing policy documents, for them to actually read the information from the document. So getting as much of that prior to the meeting is so important. As much health information as well, because of course that will steer what advice you may or may not be giving. But I also think it's really important when encouraging a client to get that information before the meeting, telling them why that's so important. So a client isn't going to be motivated. They're not going to see the benefit unless you explain what the benefit of doing that is. So we would explain to a client, you know, by filling in this information beforehand, it means we'll spend less time on the call, and it means that we can spend that time utilising and giving you the best advice possible rather than spending it gathering information. And with all due respect, a client knows their date of birth much better than I do. So it makes sense for them to provide that before the call, and then we can just check it in the meeting, which obviously is a much quicker process. But I think ultimately it comes down to giving clients benefits to be motivated to give you that information.
Yeah, some great tips there. You definitely don't want to be guessing date of birth, do you? Through fear of offending people. So yeah, ask the client for that. No, thank you, Nicola. And Charlotte, is there anything you'd add from a quilter perspective in terms of that mortgage process, or anything around the need for income protection at the moment?
Yeah, I think you touched on it though. It's the need for income protection. It's never changed. We're always known there's a need for protection and focusing on income protection. So whether it's wealth or mortgage or other areas of advice, it's absolutely, you know, it's a foundation part of financial advice. And I think, yeah, the two ladies have already called out some key opportunities with the volatile mortgage market. Even the wealth market has some volatility at the moment, and people feeling a little bit more nervous around their financial planning journey and what that looks like to them, and what impact that's going to have to their retirement plans, or, you know, how they're going to potentially gift anything to their family. So again, it's another opportunity to bring in a protection conversation there to say, let's protect your financial planning journey, whether that does look at your mortgage planning or your estate planning, or even your financial planning journey, your pension plan. Let's have a look at how protection can secure that. And I think now with the cost of living challenge, and people are always a little bit more nervous now around, you know, what they can afford and what impacts things could happen, you know, what could happen to them, whether they lose their job or their income or they're poorly, what impacts that could have on them, but also their financial planning journey. So I think it's a great opportunity. And it's that engagement. I think in the wealth side, we have a lot of engagement with clients. They see them every year for their annual review. Mortgages now, there's more opportunity than ever to go back to speak to those clients to say, let's have a look at, you know, your rate, we've secured it, but let's have a look at what the rates are looking like now. And, you know, I think that client engagement and moving away from transactional advice and more around advice is absolutely key. And again, a huge opportunity.
I think as well, Charlotte, just picking up on your point, I think we mustn't forget that it's not all gloom and doom. There's a lot of customers sitting out there that took a 5-year fix 18 months ago that are literally, I'd say, living the dream at the moment, and they have got an awful lot of disposable income. And at that point, you may have, you know, been busy, you may not, but there's got to be a significant back book that we could look back over. And it's almost like the conversation where you say to the client, you know, we're going to prepare you to start making these monthly outgoings because this is what's going to happen, but get used to paying the direct debit now and start to get that in place. So I think anybody with a significant back book, particularly people on 5-year fixes, should be going back and having a look at that as another opportunity.
And I think as well, just expanding on what you mentioned, Vicky, about, yes, with the cost of living, they are going to have a lot of the time an increased mortgage payment. But I think as advisors as well, we have to reframe our mindset to say, well, yes, I appreciate that payment's going up, but that does mean that there's more at risk if something happens to you. Definitely. So I think it is important to prepare the client and to shift, as advisors, shift our mindset to look at it from that perspective where we can, but also get the client to see that the more you're paying out, the more there is to lose. I think that's an important conversation that we need to be having as well.
I think the key word there is risk, and I think it's helping the clients understand the risk to them and their lifestyle and their family and what the risk is to them, and it's how much risk they want to take. And I think that's how you can make it personal to them, to say, look, what would you want to do if this were to happen? if this were to happen to your income, how would you want to impact your business, your family? And in making it personal. You're not even talking about a product. You're not even talking about a protection product or a solution. You're talking about a need and making it personal to them to think, yeah, I think I need to do something here. I need to look at what I can do to protect myself and my family. And I think that's where we're seeing real success for firms embracing that kind of engagement with clients around, let's look at your needs, let's look at your risk, and then we can look at solutions as at the end part, instead of talking about income protection or a product early on. I don't know if you find that.
And absolutely. Sometimes with advisors, because I train a lot of our advisors as well, and sometimes they're getting too caught up in solution-based conversations too soon.
Right.
And I also think that that's what can make it perhaps a little bit more daunting for some advisors that are perhaps not as familiar with the technical terminology that applies to income protection. They think that they have to give all of the advice and the solution conversation straight away, and actually the client's going to buy into the need. The clients, that's what they're buying. It's about the risk, and they don't want to take that risk. So to get that buy-in first, that really is going to produce the best buy-in when you do present that solution. So I completely agree, Charlotte.
There's clearly a greater need for income protection, right, given increased living costs and things. But because finances are tighter, it does make the protection conversation, I guess, a little bit harder, but it means it's just all about bringing the value of protection up front, isn't it? Really building it into the solution. I think as you ladies have touched on, it's kind of not a product led thing. It's more this should be bundled in, and it's so important given the way things are at the moment that we do protect what you're doing. So some great tips there. And Charlotte, you touched a bit on the wealth space, and I know Nicola, you do some estate planning work, don't you, with clients? Correct. So does income protection or protection generally come into those conversations?
Absolutely. So, I mean, when we're looking at planning for somebody's estate, yes, of course, naturally life insurance will be part of the conversation, but we will still talk to every client that it's applicable to about income protection, because ultimately if that income is lost, that will have an impact on those assets, and those assets may not be there when the time comes to execute the will. So it is a part of the majority of our estate planning conversations as well. And I think sometimes we might look at estate planning and directly think about the link between life insurance and estate planning, and sometimes overlook the income protection conversation as a result of that. Whereas income protection, again, the way that I look at it is it's the foundation to everything. So we need to be having those conversations in estate planning conversations as well.
Yeah. And does your meeting prep, so that the work you're doing ahead of those estate planning meetings, is that similar to what you do on the mortgage side? Do you do anything different with estate planning clients?
We do things differently, but I'd probably say that the difference is more based around the will and the estate planning aspect of things. The protection prep would be pretty much exactly the same, so we'd still get a fully completed fact find. In fact, it would be easier because where we're doing estate planning, the client would have filled the fact finding way before they even had an estate planning conversation. So we actually find it less difficult to get the information because it's already there a lot of the time. But apart from that, exactly the same, pretty much. We don't change a lot in terms of the prep, no.
Nicola, do you use tools, just out of interest, tools to highlight the need or the risk for protection?
We do, actually. So we're very visual in our business. So we do a lot of video calls, we do a lot of screen sharing, and we've got personalised charts that it's difficult to explain. I wish I could show you, but we haven't got a laptop, so I'll do my best to explain it. It's like a chart that will show Mr. and Mrs. and it will show all of their bills stacked on top of their income as like a bar chart. And then you can click onto Mr., which makes his income disappear. And then it shows the shortfall.
Yeah,
it's really
visual's
clever.
Really powerful, isn't it?
Very powerful, and it will show in order which bills will be paid and which bills won't be paid if you lose one of the incomes. And we find that resonates really, really well with customers.
I do find that, I think when advisors embrace tools, and especially to the visual tools to highlight the need, that's where we see some real success, where firms can really start looking at protection solutions. And even in the wealth world, you've got cash flow modelers where you can utilise that in regards to your financial planning journey, what the impact would look like visually if you were to lose an income. It's really powerful. And then it kind of takes that challenge away of having to have a difficult conversation. It's like, there's the need, we've highlighted that, let's look at how we can address that and protect you again.
You're completely removing any product discussion, no jargon. You're just dealing on a personal level with the facts and the reality of the situation, and that's really powerful. because we do talk in this parallel universe language where we use all these acronyms and all these product solutions, but ultimately the customer that comes in the door, I mean, Nick, you tell me that I can imagine the percentage of people that have got any sort of degree of knowledge and understanding is going to be in the minority, isn't it? It's going to be a small, most people don't get how products, what they're described, what they do and what the jargon is. So you've got to break it down without making them feel stupid.
Definitely. And even, you're exactly right, Vicky, but even the word protection doesn't resonate.
I was just about to say that. What does that mean to anyone?
Doesn't. It's like, what is that? So, you know, words like, we try and get in the habit with our advisors of referring to it as financial resilience and other things that will resonate much better. And even the word income protection, I don't think that resonates that well with a lot of people. So yes, we will call it income protection because that's what it is. But in our client meetings, we say we like to refer to this as sick pay because people understand that better. Sick pay, it's doing a similar thing to what your employer does, but it's just that you pay for this.
Makes sense.
And that does help people to see it differently.
Is there an element of, again, I guess coming back to prep ahead of these kind of interactions, do you send materials or do you send any explainer type content that does start to break down that jargon, or do you tend to do that in the meetings?
We do actually tend to do that in the meetings, but I did stumble across a brilliant, somebody shared it on LinkedIn. It was Aviva produced this really good explainer video. It's fantastic. I think it's about 3 or 4 minutes long and it's completely unbranded except when you get to the last 2 seconds and there's an Aviva logo. But I found that about a week ago and I thought that's brilliant actually, and we might start to integrate that video into our process, but at the moment we don't send anything prior. We do just leave it to the advisor to do the explaining. But I do think that providers do a very good job of providing a lot of free resources for advisors, but sometimes it can be, certainly where we've got quite a few advisors in our firm, it can be difficult to make something process integrated. It's quite a big task. So we kind of leave it to the advisor to send things on an ad hoc basis when they feel it's necessary. But I do encourage people to go to the provider websites because some of them are brilliant.
Good tip. And Vicky and Charlotte, I suppose within your networks you must provide a lot of kind of educational resources and sales aids and tools that advisors can use.
Yeah, definitely. And I think it's about having that suite and different formats and different functionality, because as we've sort of articulated, every client's different. So for example, if you think about a first time buyer, you know, you're going on a bit of an education journey with them, aren't you? You know, they're buying a home for the first time, they're having a mortgage for the first time, they're terrified, you know, that you're on a very much more of an educational journey, and they're probably of the mindset of that'll never happen to me. You know, I've saved all this deposit, I've got the house now, I'm infallible, you know. And then you know, you've got then older clients that probably sit more in the wealth side in Charlotte's area, that, you know, probably, you know, they're financially savvy, they've got a good gauge, and then it's about, you know, the right material to suit that medium and to suit their level of expertise. So I think as a network, it's vital that you do have a range of materials and that they're evaluated regularly as well, because customers' buying habits and behaviours change. You know, if the last 6 months have taught us anything, the volatility and change in the market can be rapid. You know, everybody was mortgaged up to the hill, everybody could afford it before we started seeing this crisis in pricing. And now things have changed, so people are going to be more risk averse. So your material needs to reflect that, and you need to have suitable material to reflect the market at that given moment in time for the different types of customer.
Yeah.
I think types of customer and types of advice, you're absolutely spot on. And types of advisors. You'll have different advisors that feel comfortable utilising different tools, and what one might work for one might not work for another. So I think you're right, having a suite of different tools available is absolutely crucial, because then you've just got to find the right one for you.
Yeah. No, great points. And Nicola, coming back to you, so I suppose we've spoken about mortgage clients, we've touched on wealth clients, we've spoken about estate planning clients. Of course, there are different types of clients going in, thinking broader than that. What does the client prep look like for those different individuals, and who are those groups that you're talking to and you're advising?
Well, I think one of the groups that often get overlooked is the rental market. So, you know, in terms of the prep that we are doing, again, if I'm honest with you, the prep, even whether someone's got a mortgage or not, is fairly similar, because if somebody's already got a mortgage, they often probably just have basic life insurance. So we're still going to be prepping to have that income protection discussion in the same way that we would for a first-time buyer, because first-time buyers probably know very little about income protection, but a mortgage client with just basic life insurance probably doesn't know a lot about income protection either. Yeah. So I think that sometimes we assume that people know more about these products than they actually do. But in terms of the rental market, that's something that we do change the way that we phrase income protection, because when somebody's renting, they don't even see the need at all. Whereas when someone's going for a mortgage, let's be honest, they might not end up with as much protection as they should have in every single case. But I think that people are much more aware that that is a trigger point for them to start looking at the protection. So when we're talking to a renter, for example, we do much more of an educational piece on exactly what income protection is, and probably go into a lot more in terms of what the rate of SSP is, you know, give them just a lot more education around it, because a renter probably doesn't even know that these products, they're eligible for these products in many cases. So yeah, I would say that definitely more detail when it comes to renters.
And they're so much more at risk, aren't they? I mean, you know, all the recent headlines on, you know, rental increases, the percentages that they've gone up, particularly in London, and the competitive nature that's pushing rents up even more. You know, you think actually, if, you know, going back to Charlotte's point on identifying the need and the risk-based model, surely as a renter, that the IP risk there is, it's got to be much more significant than a lot of mortgage customers that we're going to be seeing.
Just adding to that, Vicky, this was it May, I think, the average London rent hit £2,039, which is a record. That is way more than the benefits cap. So if you were off work sick, you wouldn't even be able to cover the rent. And again, when you think about it, is a private landlord going to be any more lenient on somebody than a lender? I don't think so. So I think that, again, there's a huge, 73% of renters don't have any protection, I think it is, or something around that mark. And I just think that that's a market that needs some much more attention paid to it. You know, and there's so much opportunity for advisors, because when we see a first-time buyer, I think it's quite easy for an advisor to think, oh, they're not ready to buy yet, I can't do anything. And actually, they're probably renting. There's a massive opportunity there for broker and for the client, because you're talking about not only protecting their income to make sure that they can get that mortgage, but if something happens to them before they find that property, then you haven't got that client. You're not going to be able to get that property in the end. There's so many opportunities that I think that sometimes we can overlook, and I think it's just an important conversation that needs to be had.
And it's the way we're going, isn't it? You know, that the proportion of renters is just increasing. So that's how the market's changing. So I suppose we have to respond to that. And actually, you've got a pool of younger potentially clients there, where IP becomes more affordable. There are fewer health challenges potentially. So it's actually a great time to have that conversation.
It's a good time to start their journey in financial services products. It's a good starter product, isn't it? Definitely. Get them used to it being part of their outgoings, the whole protection ethos. And, you know, let's face facts, there's going to be more people renting for longer periods of time. That's an absolute fact. And I'm with Nick, you know, I don't see landlords being more lenient with renters, because there's a queue of another 10 people that want that property, isn't there?
Absolutely. Exactly. And I think as well, one of the other reasons why renters might, if they have heard of these products, sometimes be put off, is because, again, I think that there's a myth that it costs a lot of money. Now, yes, in some cases, obviously income protection gets more costly depending on what type of cover it is and how much you're covered for. But one of the things that we find effective and is part of our advice process is introducing that conversation right from the start in the IDD. That's when we start that conversation. But also we give people illustrative costs right in that initial mortgage fact find, whether they're ready to buy or not. We'll say, look, this is what a 1-year IP will cost you. This is what a until retirement option will cost you. That's a minimum and a maximum rough guide as to what you'll look at spending. And the minimum 1-year option is often a £5 or a £10. So I think that can put people at ease, because a large portion of the reason why people probably don't want to consider protection is because they think it costs a lot of money. We know it doesn't. but customers don't.
Yeah.
So I think just dispelling that myth early on in the process can be very helpful as well.
Kind of managing expectations.
Managing
earlier on,
expectations,
so it's a
yeah.
more successful outcome. Yeah, no, great tip. And Charlotte, coming back to you then, are there any other, I don't know if you want to add to any of the rental points, or are there any other kind of types of clients, and thinking specifically about meeting prep, any last thoughts you'd like to share?
I think yeah, the opportunities that we've discussed are absolutely, they're key for today's market. But I think when you look at it from a wealth perspective, or even from a mortgage perspective, you've got an intergenerational play there as well. So you're looking at how you can help protect clients at a younger stage of their life, their financial planning journey. You've got clients that you're dealing with mortgages, potentially looking at estate planning, wealth preservation, all of this type of advice. You've got a pool, a huge amount of opportunity, a pool of clients there that you can then support on their financial planning journey and protection. And IP is absolutely a fantastic way to start. And especially if you're looking to try and help, potentially look at someone's, gifting, or how they can support some of their children on their financial planning journey, whether it's a deposit for a house, or you want to potentially pay for premiums for their IP. You've got avenues there you can explore as part of your wealth planning journey. So I would say don't dismiss protection if you're wearing a wealth hat or even a mortgage hat. There's opportunities now that you need to consider. And I think the key word at the moment is value. Everyone's talking about value of advice, value of products. This absolutely does bring value. It brings value to clients, value to advisors, their business. That's not to shy away from that point. Absolutely, it's a great way to to grow your protection business, but also to absolutely add value to your clients and highlight the value that you can bring as an advisor. So if you haven't already explored protection and the opportunities, I think now is no better time than ever.
Thanks, Charlotte. And Vicky, coming to you, last question. Any final thoughts you'd like to share?
I think just thinking about sort of our requirements under consumer duty and our obligations there in terms of ensuring that the product meets the target market. I think now it's more important than ever for advisors to really spend time understanding each product's features and benefits. And that's something for ongoing competency, but also when you're going into specific client meetings, is ensuring that you understand those products and your recommendation inside and out, so that the advice is truly tailored to the end customer and meeting the needs of the target market. I think it's really, really hard for advisors to maintain product knowledge. I think our product sets are very complicated and they change all the time. And that's without having to understand all the wealth products and all the lending products that are coming in and out of the market. So I understand that's really tough, but keeping that competency, training, listening to the BDMs, going along to events, getting that CPD up is critical. To meeting our obligations under regulation, but also for the client to have the best experience and to give them the best outcome. And ultimately for advisors to succeed and be a full, well-rounded advisor, not just a mortgage advisor, not just a wealth advisor, but an M&P, a W&P, like a fully rounded advisor. That product knowledge is absolutely critical. And there's plenty of resources out there, right?
Yeah, definitely.
Yeah.
And can I just add a point as well, Vicky, to what you've just said there? I completely agree with you. That knowledge is so important. But one thing that we find in our business works well is that having a two-stage approach. So the fact find is done separately to the presentation. Yeah. And then what that does is allows you to focus on preparing for those individual meetings in the best way. So I always get our advisors to think about the fact find. You're just finding out the facts. You don't have to know every single thing about every single product in that first meeting. Yes, and true. I think that does then relaxes the advisors to think, okay, I don't have to come up with all the answers in the fact find because my job is to find out the facts. It then allows them to do that prep and research before a presentation where they're perhaps not so confident with the technicalities of the products. You've then got how many hours between fact find and press to go and read the key features inside and out and do whatever it is that you need to do to make sure that that solution is 100% right for that client. So I think the point I'm trying to make is that if you are perhaps not as confident with the product suites, then having two separate meetings we find can help in that situation rather than trying to cram it all into one.
Yeah, that's a really good point. And it's about, that fact find done really well. it's picking out on those really specific individual needs and the emotional points, the touch points, and then drawing that out in your product recommendation to really match the identified individual needs. That allows that time, doesn't it? That's just brilliant.
Definitely. And it gives you thinking time as well,
Yes,
because no matter how
definitely.
experienced you are, sometimes you come away from it and think, oh, okay, you look at things differently, you can reflect. So I think having that time in between can be beneficial in more ways than one.
Definitely.
That's a great piece of advice, because we've spoken about not leading with product, but if actually you've got to hold a lot of product knowledge, you might be leaning that way, you know, if you've only got one meeting. But having the two, as you say, you can kind of park that, relax, and focus on the client driven, you know, what they need to start with. So excellent tip. Sadly, ladies, we are out of time, but thank you so much for joining us and sharing your thoughts on today's panel.
No, thank you.
Thank you.
I'm delighted to be joined for a bit of a bonus chat by Ash Borland and Hayley Klukas. If you haven't seen Monday's content, it's well worth checking out the whole session, including our chat on getting started and establishing yourself online. We thought we'd continue our chat to cover off how this online presence has the potential to help with preparing clients before you have the protection conversation with them. So first of all, I wonder if I can ask you how you can use your online presence to prepare clients for meetings where you're going to be talking about protection. So maybe including educational content. Ash, what do you think?
Yeah, you can use it in loads of different ways. So one of the ways that we use it is you can use it in before the clients even come to you. If you're creating educational content that is effectively warming them up to the idea of what they're going to have a discussion with you. So if you've got videos out there or written content or posts or anything out there that is organic, that's pushing towards this is what we will ask you about, medical questions, things like that. You can also then have it in automated sequencing afterwards. So once they've booked an appointment with you, you can easily have like an automated email sequence that gives them information that effectively says, this is the stuff we're going to talk about, this is some stories, this is some people that have claimed. And actually, it's really important. I think the more you have that, and the way I described it to a client recently was a lot of time people are trying to pull in more leads.
Yeah.
And we're pouring those leads into a very leaky bucket. And instead, what we should be doing is trying to figure out how we can plug the bucket and make those leads last longer. And one of those is thinking about that client journey before they see you, but once they've registered. Yeah. And so you can do lots of things with automations and email sequencing and stuff like that. It's very, very, very useful.
Yeah. And Hayley, what would you add?
Yeah, a lot of the content that we do is educational. Yeah. And our customer journey as well. We, before the calls, we like to even give the customer insight into price. So we've designed certain calculators that will break it down for them, so they can expect certain prices before they actually speak to us. And yet, like you say, what we do is we'll warm them up with a welcome email, and we'll explain the process of what will happen. We're going to call them, we're going to take them through this, we're going to ask them these questions. And it all contributes to the advisor having a lot of the information passed to them beforehand, before they actually speak to the customer.
Yeah, definitely warms up the client before that conversation happens. So everything we've talked about yesterday and today, what we're focusing on is in the hope that we're generating business and leads. But I'm wondering how you go about assessing the quality of those leads and the business you're getting before you try and move forward with it. Hayley, what would your thoughts be?
I'd be looking at the data. Are the people who are booking appointments, are they answering the phone? What time of the day is best for your customers? Is it, on their lunch breaks? Is it mornings? Is it evenings? What type of content are they engaging with beforehand? Are they opening the email that you've sent to them? Are they replying to the email? I would be assessing it that way. How many of them customers are you getting to quote stage? Are the customers coming through? Are they clear on the process? Are they clear how long the appointment's going to take? That is how I would assess the quality, and then the end goal, how many sales, how many customers are converting.
Yeah, there's some pretty sound metrics there. Ash, would you add?
Yeah, it's pretty much a lot of the same stuff. The thing that I try to focus on with people with us is it's trying to get it's like a power switch. So the ultimate goal would be to have clients coming to you and effectively asking you to give them the insurance. That's how we measure it. And that, like I said, we said yesterday, it takes about 18 months to get to that point. It's effectively, if someone's coming onto the call, a good measure of it's working is if they're saying to you, I watched the video and I saw this and I actually want this because of this reason. If you as the advisor have to sell it, you have to say, this is you should be thinking about this, then at that point, it's probably not working as well as you thought. And so we use it at that metric. It should get easier and easier and easier to sell to the client. It's very hard to track organic. And that's something that I would really like to stress is when it's ads and paid and there's a funnel and you can track it, very easy. The problem with social media, when you're posting anything on LinkedIn, it's near impossible to track, and to get it from the end stage, because the way, and this is something that's not thought about enough, is what is a social media lead? And a lot of times it can be, someone might recommend you, their friend might say, you go and speak to this insurance advisor, they're great. But then they might look at you on Instagram, they might let them go and check you out on LinkedIn, they might go to your website. So there's so many different brand touch points that you don't know what it was. And it has always been the case. And I often find people that like referral. They'll go, referrals are really high. I seem to be getting more referrals. And I'm like, and then you check it through and they go, oh yeah, I watched that video, watch that. So it's more, I think is the client, there's less friction, you're selling more, they're taking higher premiums. There's, as in regards to, because they're understanding the product better, it's the client understanding is what we try to track. And if you're done well, it does go up, because you're not getting people who, you're getting people who have maybe been in that sequence longer, or they understand it. It goes back to your first question. And so that's how I track it.
Yeah, sure. And just one final question for today. I wanted to touch on the subject of reviews, whether they should be part of an advisor's strategy. Are they useful to share with clients before a meeting? Do they convince clients, or is it just a matter of sharing with anyone else that you've got a satisfied customer on your hands? What do you think?
So I'm a big fan of reviews, but okay. I think they fall into different, there's different use cases for them. So I'm a big fan of, you need three things. You need to have competency of knowledge, to demonstrate to the client you know what you're talking about. Yeah. So that is written content, video, whatever. It's actual information, so the educational stuff. You need to have competency of implementation. So you demonstrate that you actually do the job. You walk the walk as well as talk the talk. Yeah. And so there's lots of different things. That can be screenshots of you in a client meeting, whatever that may be. That's not a review though. Yeah. And then you need to have social proof, which is other people say you're good at the job. And they are really important. I post and get my clients to post reviews every single day. Like every single day. You should be cycling it over and over again all the time. The more reviews you have, the better. Video, written, like audio, anything, and across all mediums. They are so important, but they don't work on their own. But in regards to would I push it down someone's throat at the beginning? No, probably not. I'd want them to see it if they wanted to go and see it.
Yeah, it's there. Hayley, would you agree?
Yeah, they're so important. Again, we will put them in our ads sometimes, we'll put them in the ad copy, we'll let people know that we're rated 5-star. But we do find that people will do a bit of due diligence on us as well. And they will, they'll see that we're highly reviewed, and you get such a better quality customer from a customer that's searched on a review platform and has come to you. The quality is really, really good, because that customer is shopping around and you're standing out for them.
Oh yeah, so just to add on to that, a simple thing that I think anyone who's doing this just to think about is, as you said, people will do their due diligence and they're going to look. And one of the things that is not a pet hate of mine, but it's something I'm like, it's so easily fixable, is go onto your LinkedIn, because there's lots of other profiles, but the amount of people that don't have LinkedIn recommendations, just get 10. Just get 10 people who've worked. You don't need more than that. But you would be in the top 1% of people if someone was like, is that person's good? That's their chosen platform. But people don't do it. They think, well, no one really checks. You don't know. And that could be the difference between one sale or not. If that you need
win.
Quick win, easy win.
And definitely it sounds like a worthwhile endeavour for advisors, not just something else to do. To do this.
It's worth the weight in gold, I think, testimonials.
Yeah. Well, listen, thank you both once again for joining us for our bonus chat and for your time yesterday. I think there's loads of tips there for advisors added to what they've seen earlier today as well in our panel discussion. So thanks.
Thank you.
Well, thank you.
So continuing the bonus content, we're delighted to bring you some timely reminders of why we do what we do, brought to you by 2 of our 7 advisors.
First, we'll hear from Mike Roberts at Penny Matters talking to his colleagues about one of their clients' claim experiences. And after that, Tracy Boyd from Mortgage Hub Expert Limited discusses the claims experience with a client of hers.
Right, hi Nikki.
Hi.
As you know, I'm part of the Income Protection Task Force, 7 advisors, and I just wanted to share this awesome success story that you've come across with a friend of yours. So just wanted you to tell us a little bit about her background, Lucy.
Great. So like you say, she's a friend of mine, Lucy. I was just chatting to her one evening when we went for a drink after rehearsals, and she was telling me about how she'd managed to, due to the fact that she'd had an income protection plan, which her dad had actually insisted on her getting when she bought her first property, that when she unfortunately had a back injury that was partially due to a hereditary condition and partially due to an injury. Very fit, very active young lady. She worked in the emergency services, so she had a very physical job. She does like elite triathlons and
Oh, wow.
extreme exercise things. So she's really, really fit, loves going down in the gym, loves being active. And unfortunately, she got this back problem, which needed surgery. So there she was, sort of mid to late 20s, unable to do her job because she literally couldn't move due to the back problem. Had to have surgery pretty quickly. She luckily had an income protection plan. Within 2 months, it started paying her an income. And that meant that basically everything was covered. She didn't have to move out of her home. She had all her mortgage covered, all her bills covered. She even had a bit of extra money that went towards paying for private physio, which she said really, really helped her with her recovery. And she recovered much, much sooner than anyone anticipated she would. In actual fact, she was able to get back to a form of working, unfortunately not what she'd been doing previously, but she was able to get back to working full time within 12 months.
Excellent. Yeah, from what I've seen, she is paying about £20 a month, got over £1,300 worth of cover. The benefit she got compared to the premium she was paying was incredible.
Yeah,
and like you say,
I think I worked out 65 years worth of premiums.
Yeah, 65 years worth of premiums. Yeah, amazing. And she did make a comment about sort of her overriding thoughts.
Yeah, no, she just said that it meant that she didn't have to worry about the money side of things. She didn't have to rely upon her parents. She knew that everything that needed to be covered was covered, and all the essential living costs and everything. There was money in the bank that she could go to, and she could carry on living pretty much as she was. And like I say, she was even able to afford the additional physio, which was a godsend and aided her recovery.
Awesome. What we like to hear. So a great success story. Thanks for sharing. Yeah, speak soon.
No worries. Bye.
It was at the beginning of lockdown and it was a Sunday evening, and I had a bing on my phone and it was a text from Damien. When I read that text, I've got to say my stomach did do a little bit of a flip. Damien, would you like to tell us what happened on that Sunday at the beginning of lockdown?
Well, I'd had a bit of a bad stomach and a bad chest for about 3 or 4 days prior to this. Back and forth to the doctors a couple of times, and it was a stomach bug. And on the Sunday evening, well, I think it was about 11 o'clock, was it?
Yeah. Top Gear was on, actually. It was a bit earlier than that.
Yeah. So I was on the phone to the emergency services, and they basically told me I was having a heart attack, and told me to go straight to hospital because there was no ambulances available for me either. So going down to the hospital, I had the checks, and it comes back that I was having a heart attack to them. On my way to being transported to the next hospital, I messaged yourself, telling you exactly what was happening and saying, I hope that you get this and you can help me. Luckily, you replied by, I think it was 8 o'clock in the morning, with already speaking to the insurance company, which, for myself, my wife, knowing that there was something in place was, great. I'm a bit dubious about insurance companies because there's always a clause somewhere along the lines, but this one was definitely worth the payments at least. So,
So, Damien, tell me, you don't look like an old person. You look
no.
fairly young, fairly fit and healthy. Have you been fit and healthy up to this point?
Yes, yeah, I was actually training for the army at the Army Reserves at this point, so I was the healthiest I've ever been, and I actually got through up until I had this incident. And one of the most common causes of this sort of myocarditis is what it was, myopericarditis, is either in athletes or from norovirus. And because I was training so hard and I had the norovirus, it didn't really help me at all. So
when you spoke to the insurer and made the claim, I know it was really difficult to get hold of them on the telephone initially.
Yes.
You didn't have very good phone signal in
Nope.
hospital, and you were holding on the phone. It was the beginning of lockdown, and the phone was just ringing off the hook for the claims department, because I would imagine a lot of other people were also phoning up making claims. And I contacted my business development manager, who got the claims people to contact you on that Monday.
Yeah.
Tell us, Damien, how long did it take from having that conversation with the insurer to actually physically receiving some money in your bank?
I would say 5 to 7 days.
Okay.
It was really quick. I was expecting weeks, maybe months, but no, it was straight away. Partial payment, I think, would start off just so that they can get the initial ball rolling and make sure I had something there to cover me. But then after that, everything was literally based on my income that I had already put in. I think I was self-employed, so I thought it was going to be a bit of hard work trying to get that. But what they did is, I think they get in place the caps that they have, and luckily I managed to get that.
How long was it before you were able to go back to work, Damien?
Just under 9 months.
And did you receive money during that whole period?
Yes, every single week, I think it was.
And then when you went back to work, what happened then?
They did it in staged, so it was entirely up to myself. That they didn't dictate what I had to or couldn't do, as long as I wrote down the hours that I worked. They didn't really ask for proof of those hours, but they asked me for times, and they just calculated that way. So if I worked for 3 hours one day in that week, that's what they'd take off the total amount for that payment, and then so forth, until I eventually got up to working 5 days a week again.
And how long did that take?
That took probably another 4 months.
Yeah.
So yeah, it was quite a while, about 11 months in total, just under a year.
So Damien, you're married and you've got a family. I say young family, I think your girls are getting a bit older now.
Yes, the youngest is 16 now, so.
It must have been such a worry for Sarah, your wife, when all this was going on. And what sort of impact did it have on all of your family?
First of all, the initial shock that nobody thought I was coming out of hospital. That was hard for everybody, I think. Knowing that there was the money side sorted, but up until the first payment, 5 days out of the 9 that I was in hospital, we were still unsure what was going to happen, even though we were promised, which it did come through. Emotionally, it was hard for my wife, especially, holding down the fort, coming back and forth to the hospital. Plus it was COVID, so we couldn't really see each other. Yeah, and just keeping everything together. The bills and everything, it comes out of the one bank, so as long as the money was in that way. But she basically had to help me rebuild myself as well to get back to where I am now.
So as a self-employed person, we'd put in place full income protection, and it was day one cover for you as well,
Yeah.
which was the right thing to do, wasn't it?
100%.
So, thank you so much for sharing your story with us, Damien. I'm sorry you had to make a claim, but delighted that it did what it said on the tin, didn't it?
Oh yeah, 100% and more.
Yeah, great. Thank you very much.
Very welcome. Thank you.
Bye-bye.
Bye-bye.
And that brings us nicely to the end of day 2 of IPAW. Loads of valuable takeaways there. I think one that stands out for me was what Stacey had to say around preparing for that mortgage conversation and the importance of thinking about when you bring up protection in that conversation and, importantly, how you bring it up. What was your key takeaway from today? What one thing are you going to do differently off the back of the content you've heard with us? Are you going to change anything when it comes to your client meeting prep? Let us know with a LinkedIn post, preferably a video, using the hashtags Let's Talk IP and IPAW 2023 and tagging IPTF so we can see what you're posting and resharing it. Join us tomorrow when we take this conversation one step further with a session on conducting the most effective client meetings, and in particular, overcoming the common objections we often hear around IP. We've covered some of those key objections today, but tomorrow we're expanding the conversation with a sales masterclass delivered by 2 expert protection coaches. And don't forget, each IPAW lunchtime session gives you 1 hour of CPD, with certificates being emailed out automatically following the session. It's definitely not the only reason to get registered, but still an important one worth highlighting. Thank you so much for tuning in today, and we look forward to seeing you tomorrow.